Welcome to The Explainer. Today, we're getting into the visual language of the market, pulling some of the best insights from Steve Neeson's amazing book, The Candlestick Course. We're going to learn how to stop just looking at numbers and start reading the story behind them.
Think about it. When you look at a stock chart, what are you really seeing? Yeah, sure, there's price and there's time, but underneath all that data, it's just raw human emotion. It's a massive, nonstop battle between optimism and pessimism, between fear and greed.
Your standard line chart can feel, a little cold, right? A little lifeless. It shows you where the price went from point A to point B, but it doesn't really capture the drama, the psychology of what happened in that trading session. The real story gets kind of lost.
But what if there was a better way? Turns out, there is. It's a technique that was perfected centuries ago. We're talking 18th century Japan by rice traders who needed to visualize market sentiment in a single glance. And that, my friends, is the incredible power of Japanese candlesticks.
Okay, so here's our game plan. We'll start with the market's hidden story. Then, we'll break down the anatomy of a candlestick. After that, we'll look at how single candles can tell their own tales and how they form powerful patterns. And finally, we'll put it all together to see the bigger picture.
So, let's jump right in with part one, the market's hidden story. What is the big deal with these candlesticks anyway? Why are they so special? Well, unlike a simple bar chart, they give you this immediate visual feel for what's really going on.
It really all boils down to this. Every single candle is like a miniature report from a battlefield. It shows you the fight between the buyers, we call them the bulls, and the sellers, the bears. Who won the session? Who's in control? The candle tells you, instantly.
Okay, on to part two, the anatomy of a candlestick. You see, if we want to read the story, we first have to learn the alphabet. And that means getting to know the 4 key parts of every single candle.
What's so incredible is how these 4 simple data points, the open, the high, the low, and the close, are combined into one simple shape. It's this elegant design that packs in so much information.
First up, you've got the real body. That's the thick, rectangular part. You can think of this as the main event, the real tug of war between where the price started and where it ended up. A long body? That's a decisive win. A short body? That's indecision.
Now, what about those thin lines you see sticking out? Those are the shadows, or some people call them wicks. They show you the full extent of the battle. The upper shadow marks the highest point the bulls reached, and the lower shadow shows the lowest point the bears pushed to. Really long shadows tell a story of rejection.
And, of course, the color. This is your instant scorecard. If the body is white, or a lot of modern charts use green, it's bullish. It means the price closed higher than it opened. The buyers won that round. If it's black or red, it's bearish. Price closed lower. The sellers were in control. Simple as that.
All right, Section 3, Single Candles Tell Stories. Now that we know the basic anatomy, let's meet some of the main characters. See, some individual candles are so important, they show up at critical moments so often that they've actually earned their own names. We're going to focus on 2 of the heavy hitters, the hammer, a signal of a potential bottom, and the doji, which is the ultimate sign of a stalemate. Think of these less as data points and more as characters, signaling a major plot twist could be right around the corner.
First up is the hammer. It often appears after prices have been falling, and its shape looks exactly like what it sounds like the market is trying to hammer out a solid base. It's a classic signal of a potential bullish reversal.
But what's really crucial here is the story the hammer tells. Picture this. The session opens, sellers immediately take control and just slam the price way down. But then, the buyers stage this incredible comeback, pushing the price all the way back up to close near the high. The bulls just flex their muscles, big time. Okay, next up is the doji. Now, a doji is fascinating. It is the perfect picture of total indecision. It happens when the open and the close are pretty much the exact same price, which means you get a tiny, almost non-existent real body. It's a complete draw between the bulls and the bears.
And this quote just nails why the doji is so important. When you see a doji pop up after a really strong trend, it's a warning sign. It signals that the energy behind that trend is starting to fade. The market is basically hitting the brakes, unsure of what to do next, and that often happens right before a reversal.
So, part 4, the power of patterns. If a single candle, like a hammer or a doji, is a powerful word, what happens when you string a few of them together? Well, you get a full sentence, a more complex and often more reliable story about what might happen next.
Let's look at a classic 2-candle pattern called the bullish engulfing pattern.
And yeah, it is just as powerful as it sounds. This pattern can be a major signal that momentum is shifting from the bears to the bulls.
So here's the psychology behind it. On day one, the sellers are still in charge. No surprise there, pushing the price down. But then, day two happens and bam, the buyers not only reverse all of the previous day's losses, but they push the price so high it completely engulfs the entire range of the day before. It's a massive visual power shift.
Okay, final section, reading the bigger picture. Wow, we've covered a lot of ground here, right? From basic anatomy to full-blown patterns. So let's zoom out. What are the big, important ideas you should walk away with?
At the end of the day, it's all about this. Candlesticks turn boring price data into a living story of market psychology. The color, the shape, the patterns, they're not random. They are direct signals from the battle between buyers and sellers. And because they show you that human element so clearly, they can often give you a heads up about a potential change in direction way earlier than other tools.
By learning to read candlesticks, you're not just looking at data anymore, you're learning how to read the collective mood of the entire market. You've literally transformed a confusing chart into a compelling story that's unfolding right in front of you. So the only question left is, what's the next chapter going to be?